Welcome back. You're watching the 80 Money Show with me, Kavita Thapliyal. Now, there are plethora of funds available in the market, and to invest your hard-earned money, of course, a lot of options. But how do you assess which is the right fund for your portfolio? To help you navigate through this maze on the 80 Money Show, we have on board Kirtan Shah, founder CEO of Kirtans Wealth Advisors. Hi, Kirtan. Good evening. Welcome to the show. And for our viewers, do not forget to send us your queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on the money show at etnow.tv. So, Kirtan, let's begin. And our first viewer is Dineshs Bhardwaj from New Delhi. Dinesh, good evening. Thank you so much for sending us your query. And you are looking for a target maturity fund or a conservative hybrid fund, right?
That's right.
All right, so your investment horizon is for 3 to 4 years, and which is why you are looking for a conservative investment instrument. Any particular requirement within that?
The reason is I had taken short-term debt funds, and those funds have returned in the last about 6 months.
I think there is some issue with the audio. There's some issue with the audio. We'll again dial you back, Dinesh. Till that time, I have Kirtan on board who can help you. So, Kirtan, as you just mentioned in the question, 3 to 4 years time horizon, and he looks like a very low risk appetite investor.
Kavita, thank you so much for having me on the show. So, I think my judgment for Dinesh's investment is pretty straightforward. I think if the choice has to be made between a target maturity fund and probably a conservative hybrid fund, then at least in his case, being a conservative investor, or also in general, I would rather suggest that you opt for the target maturity fund. And I have 2, 3 reasons why do I make that comment. Now, if you look at a conservative hybrid fund, we are saying that close to 25% of your investments will go towards equity and the remaining will go towards the other asset classes and largely fixed income. If you look at the rolling returns of the funds for the time that they've been around, these funds have been able to generate on an average 8.5%, 9%. I mean, the best of the funds have been able to do in this range. Now, because this does not have a larger equity portfolio, the taxation for this particular category of fund is debt, right? So if you look at fixed income taxation to this particular fund, right, your net returns will come down to as good as what a target maturity fund is offering you, right? But the disadvantage is that the returns post tax that you are going to make are not fixed, right? Whereas on a target maturity fund, at least you have a very clear visibility of how much are you going to make post expenses, right? And I think there is not a lot of margin left post tax on both the products. And I think for a conservative investor, target maturity fund not only brings in predictability of how much return would the client really be able to make or the investor will really be able to make, but it also to a greater extent reduces the volatility because you know that at maturity you're going to make this X amount minus expense more or less, whereas that's not the case with hybrid funds. And hence, for Dinesh, my advice for him is to stick to target maturity funds, being a conservative investor and with a 3-year view.
All right, that was quite an elaborate explanation, and I hope, Dinesh, is there anything else you want to ask Kirtan? I don't think he's on the phone line with us, but Dinesh, if you are watching, you can catch this show on our channel's YouTube, and you can get all your queries answered over there. We move on, and Kirtan, the next viewer we have is Hitesh Patel, and he says that he's recently started investing in mutual funds, and he has a mid-cap, small-cap fund in a portfolio. Now, he wants to understand if he can add a Nifty index fund, which is, as per his choice, SBI Nifty Index Fund later on. But recently on the show, maybe he just heard some positive commentary on large cap and multi caps from maybe one of our experts. So he wants to understand if how he can diversify his portfolio into a large cap, multi cap, or an index fund. Can he use both in his portfolio? He's also investing 2,000 per month in PPF, and he is also trying to set more amount for investment, and he's a long-term horizon investor, around 10 to 15 years, and he wants to accumulate almost 1 crore plus in the long term.
So Kavita, the first question first. I think you, as an investor, when already have a mid cap and a small cap allocation, I think it is very prudent for us to look for a large cap allocation, right? So that part of the strategy is absolutely bang on. Now, the problem that I see with the two options that Hitesh has given may not be able to solve the problem that he's trying to solve, and I'll tell you why. Since 2018, if you analyze how large cap funds have been behaving, thanks to the categorization that SEBI came up with, they've been finding it extremely difficult to be at par with the index or to be able to generate significant alpha over the index. So, if you want to add a large cap portfolio, I would rather stick to doing a flexi cap fund, which is ideally a pseudo large cap, and you will see industry average where 70% of the money invested in flexi cap is in large cap in general. So if it is a large cap which has to be added to the portfolio, I think flexi cap makes a lot of sense. I would not actually go ahead with doing a multi-cap, is because in multi-cap, irrespective of whichever fund house do you take, you will have at least 50% in small cap, mid cap. Now you already have small cap, mid cap allocation, and if you do multi-cap, yeah, it'll add a lot of mid cap and small cap.
All right, so that's the solution for Hitesh's portfolio. And on that note, I think we'll end the discussion. Kirtan, thank you so much for being a part of this show. And with that, it's a wrap on the ET Money show as well. But then I'm going to leave you with our WhatsApp number and email ID, where we keep waiting for your financial portfolio queries, which can be answered by our experts live. Thank you so much for watching. Goodbye.